Hey everyone, Coach Investor back to another video for today and back with a much requested video. We obviously covered the fintech players already a couple of times on this channel. We know that the fintech industry has been hit pretty hard because of the high interest rate environment, because of the fear of, well, consumer spending going down, etc., etc. So we're going to talk about PayPal, SOFI, ADEN, and Block in this video. I'm going to try and compare each company. So of course, it's going to take a little bit longer than usual. There's going to be a lot of numbers, lots of valuations in this video. So of course, a bit more boring than the usual stuff. Now, yes, I could be adding way more players to that as well. Could be adding players like Robinhood, players like New Holdings, etc., etc. Maybe I'll do so in the next video, but of course, do share your thoughts down in the comments below. Now, I'm going to start with Square, ticker symbol SQ, which is now called Block. Let's have a look at how the company is doing right now, valuation-wise. So we're here on Coifin. A lot of you have been asking what platform this is. The link is down in the pinned comment. Now, Block, market cap of $28.6 billion, which is pretty close to what they paid for Afterpay, but luckily they paid it with their own super expensive shares. So, okay, there is that. Year to date, the stock is down 25.7%. In the last 3 months, the stock is down close to 35%. So if we look at PE, EV to EBITDA, price to sales, price to free cash flow, now compared to its 10-year mean, you can clearly see that right now we are way cheaper than the 10-year mean. PE right now in the next 12 months, 22.8 times compared to 107.4 times. If you look at EV to EBITDA, 16.9 times compared to 83.8. If you look at price to sales ratio, 1.3 times compared to 7.8. And then price to free cash flow, 88.9 times compared to 193.1. Now, of course, you might say, yes, fine, we're extremely undervalued compared to the past metrics, but that's also because there is a lot of uncertainty surrounding this company, surrounding the economy, etc., etc. Okay, I agree with that argument, but do you think that it is now fairly valued, undervalued, or still overvalued? In my opinion, if you look at the company itself, of course, with the different companies that we are going to cover in this video, each company deals with, yes, fintech, but each company is in a certain niche more powerful than the other. At the end of the day, you want to see every company become profitable and generate free cash flow. But for example, SoFi right now is growing pretty fast. We are expected to be profitable in Q4. So we're looking at different metrics with SoFi right now. If you look at PayPal, PayPal had its struggles. It's not growing as fast as the others, but PayPal is still generating around $4 to $5 billion of free cash flow each and every year and buying back shares. So you're looking at different metrics with regards to PayPal. With regards to Block, we know we're looking here at gross profit. We know that they are focusing on adjusted EBITDA for now. Okay, fine. And for those that will ask, yeah, but what about Bitcoin revenue and the hit from the crypto market, etc., etc. I've always said the same thing over and over again. I don't really care about Bitcoin when it comes to Block because gross profit, it's still only 2% and will probably stay at 2%. With regards to revenue, yes, it's true that it takes a hit, but hey, we have to look at the other metrics when you look at Block. And then when you look at ADEN, the only problem with ADEN is that it was very, very richly valued. It got a 50% haircut. We've talked about that. The video will be in the top right corner. Right now, the company is still growing faster than a lot of tech companies around the world. It is still very much profitable and continues to do so. It's just that valuation was stretched and now growth is slowing down. You might say there is more competition in the North American market. For example, Braintree, Stripe, stuff like that. I agree. But you see, you have to look at these companies right now through different lenses. In the future, yes, you have to look at these companies with the same lens, which would be profitability and free cash flow generation. But right now, that's not the case. I hope I've made that clear. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. We're trying to reach 30,000 subscribers. We're very close to doing so, so thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now let me show you one last thing here with regards to Block. So this is the percentile rank. When you look at valuation multiples, valuation yields, margins and profitability, etc., you can see where it ranks versus its 10-year history. So it's pretty clear that when it comes to valuation, we are now at the best spot possible. Of course, you can compare it to United States financials, but again, it's not really a bank, so you can't really compare it to bank stocks, etc. But still, if you look at all these numbers, it is very difficult to say that it is not attractive at the moment. Of course, you know my opinion on leadership when it comes to Block. You know my opinion when it comes to Jack Dorsey. I think he's good at entrepreneurship. I think he's very bad at being a CEO of a publicly traded company, because at the end of the day, the goal here is to increase shareholder value. You're not head of a charity. I'm not donating money to Block. I'm expecting Block to give money back to me in the future. And so if we quickly look at the graph, we can see that we were in a very, very weird spot here at around $40 or so, which was back at the lows of 2020. Now, this is on the weekly chart, by the way. We got a big green candle, so maybe the market said around $40, $43 or so. Hey, we are too cheap. Let's now start to buy. We saw a little bump here with regards to RSI. The MACD here is so red I can't even see it, or maybe it's not even loading yet. So, I mean, this candle was a good one. Let's see if we can follow up with another big green candle that would indicate that the market is saying, look, this stock is just too cheap to ignore. Moving up to stock number 2 is another fan favorite, if we can call it a fan favorite, and that's PayPal. Now, we've covered PayPal a couple of times on this channel already, well, actually many times on this channel, and it is getting pretty ridiculous at how cheap this company has become. Now, PayPal currently has a market cap of $63.76 billion. Year to date, it's down close to 18.5%. In the last 3 months, it's down 17.77%. And here as well, if you look at the, let's call it, last 8 years, I mean, it's pretty clear the company right now is extremely cheap. PE, EV to EBITDA, price to sales, price to free cash flow, way under its 8-year mean. But here as well, I'll have to add some more information. PayPal, after the pandemic, growth has been slowing down. Transaction margins have been coming down as well. Of course, we know that Braintree is growing faster than the other segments, but it is lower margins. And of course, we have the CEO switch. Let's see if he can work his magic. Of course, his previous jobs could certainly help with the move to more focus with regards to small to medium-sized businesses, with regards to PayPal, could be more profitable for the business as well, could reaccelerate growth, reaccelerate profitability, and increase free cash flow as well. Because free cash flow, as we've talked about before, free cash flow for PayPal has been a bit stagnant for the last couple of years. Now, yes, they can use free cash flow to buy back their cheap shares, which is exactly what they are doing right now. But you would have loved it if free cash flow increased every year so they can buy more shares right now than they could before, when the stock was double, triple, or even quadruple the price it is today. Now, with PayPal here as well, let's compare its percentile rank. And here, just like Block, if you compare it to its 10-year history, when you look at the valuation multiple, we are even better than Block. It's actually at 0. Block was at 1. So yeah, it's really as cheap as it gets. It is basically valued as if it will be going out of business. Now, some people will say, yeah, but PayPal is a dinosaur. Nobody uses PayPal anymore. Well, as we've said a couple of times on this channel already, as we have provided many metrics, numbers around the world, PayPal is still extremely popular, and millions, hundreds of millions actually use it every single month, every single week as well. So to say that PayPal is dying is just being ignorant. Are there competitors that are rising up? Yes, 100%. But to say that it is dying is just an ignorant argument. And if you wanted to compare PayPal to Block in the last 8 years, here it is. You can screenshot it, and it's pretty clear that yes, PayPal is cheaper than Block, but Block is growing faster than PayPal. But PayPal is also more profitable than Block, so do with that information what you want. Now, with regards to the graph with PayPal, we broke under that $60 mark. We're now at $58, which is extremely low. Well, we're back at the 2017 lows. Let's see if we can get a big green reaction here. Currently, we are trying to get a bit back over that with not much conviction, to be honest, right now. But with the market also looking at inflation numbers recently, that might dictate where this candle will be going. Overall, I mean, with PayPal, if you look at the business, if you look at the stock, it just, in my opinion, doesn't really make that much sense where it is currently trading at. But in the next coming weeks, month actually, we're going to have new earnings reports. We're going to get way more information during the earnings call as well. So I'll keep you updated when that gets released. Up next, I want to touch on SOFI. Now, SOFI is that fintech stock that has been actually performing quite well in 2023. Year to date, it's up 86.33%. Since 1 year ago, it's up 71.8%. But yes, in the last 3 months, a bit of a weakness there. It's down 5.3%. Market cap of $8.16 billion. Now, with SOFI, since it has not been public for a long time, the valuation metrics are really very, very useless right now. You're just looking at price to sales ratio, which is not the cheapest thing you're going to see, but not that expensive either. So I'm going to show you the trend here with regards to revenue, free cash flow, return on equity, and gross profit margin. Now, of course, I'll focus on the red aspect here, which is free cash flow, still in the red, but improving each and every quarter. And as we near net income profitable in Q4, I expect this improvement to continue, and so return on equity will improve as well. But other than that, you can clearly see revenue has been trending up, profit margins have been trending up as well. I expect that to continue in the near and long-term future, but with SOFI, the market is looking at, can this become a sustainable, profitable business? Yes or no? Will we see Galileo, the technology side of the business, start to reaccelerate yet again? We are supposed to get way more information in the next coming quarters. Now, here with SOFI, if you want to compare it with something like Block, obviously Block is generating way more revenue, but with regards to free cash flow, yes, Square is sometimes free cash flow positive, but I mean, it's still not there yet. Return on equity is still negative for Square, and SOFI's gross profit margin are much better than Square. Of course, I know different businesses, etc., but here, if you wanted that comparison, here it is. Of course, compare it in with PayPal, you'll get an even worse picture for SOFI as you've seen before. Now, with regards to SOFI, the stock, of course, we know that year to date the stock has done pretty well. We also know that we got rejected pretty heavily at the $10 mark. It does seem like a little resistance point. When we look at where we are right now, we saw a little rebound at around $7.5 or so. So we can maybe use that as a reference point in the future if the stock comes back down under $8. Currently, we're over the 20, the 50, and the 200-day moving average. RSI still pretty neutral. So we're still waiting for that next quarter. Can we maybe be profitable before their own guidance? Let's wait and see. Currently, the management there has been executing flawlessly despite the student loan hit that it got in the last couple of years. Of course, that will come back and will add some tailwinds for that company. Now, last company for this video is obviously the Dutch one, ADEN. If we look at this, of course, I did a video about this not so long ago, so probably some of you will remember that. Here, the same thing. I mean, year to date is down 42.15%. In the last 3 months, it's down 50%. Forward PE of 33.8 times. So still, after that 50% haircut, it's still not the cheapest out there. But again, with quality companies, there's always a premium to pay. For example, with the trade desk, it was never really cheap. You're paying still a premium compared to the others because of the quality of the team, because of the quality of that company. Now here, I mean, every metric is also very much lower than its mean. If we even look at the last 5 years, I mean, you can see PE, EV to EBITDA, price to sales, price to free cash flow is more than half of its mean. And so this is basically the picture right now. It's still expensive, but as you can see, it was always expensive. That's why right now, even at the so-called expensive levels that we are at today, it is still almost its cheapest levels versus its 10-year history or its 8 or 6-year history as we've seen before. Again, quality companies usually deserve a premium and will never look as cheap as traditional companies. That's just the way the market works. And so with regards to ADEN, this stock, we are now not oversold anymore. We actually had quite a good rebound here for the last 3 weeks. So the market is gaining more confidence buying up this stock right now. We are obviously getting only half-year reports with regards to ADEN, but I do believe that I saw an announcement where they will have an event where they'll probably talk a bit more about where the company is right now and where will it go in the future as well, to maybe reinforce the sentiment around that company after that huge hit. Again, it's a huge hit because the company, the stock itself was very expensive. The company is still growing quite nicely, as we've seen before. I even popped it up here on the screen. It's still growing very well, just growth has been slowing down. And right now, market uncertainty is really not where you want to position your company in. So to conclude, of course, I'm biased since I own a couple of those names. I own SOFI, I own Block, and for a short term, I'm owning PayPal as well. I was very much considering buying ADEN by selling Block, but since Block is just way too cheap for me to sell right now, I rather stay with Block, even though ADEN is an amazing company and that will do extremely well in the future. If I did not have positions in SOFI or let's say Block right now in my portfolio, I would probably have been building up a position in ADEN. So those are my choices. Of course, like I said, I'm biased because I already own a position in these companies, but do share yours down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.